Welcome back to another portfolio review. With the election that was happening in early November, I didn't expect to see such a large jump in the market so immediately. I'm sure I wasn't the only one that was already ecstatic with the gains so far this year, and for it to continue significantly higher was a bit wild to see. The bull market continues, and on a similar note, we're just shy of the 500 subscriber mark, and I'm confident we can reach it before the end of this month. So if you enjoy this type of content and would like to follow along, feel free to like and subscribe to help out the channel. There were some big changes this month, so let's now quickly get into the portfolio review. Starting within Wealthsimple, I forgot and recorded this part on December 2nd, so the values will be a little bit higher because the markets went up again today. So on the one day performance, we're up 0.68% or $695, and on the 1 week, we're up 1.54% or $1,555. For the 1 month, we're up 8.47% or an even $8,000. On the 3 month, we're up 13.41% or $12,121. On the 1 year, we're up 27.57% or $22,151. And then finally, all time, we crossed the $30,000 mark with $30,196 for a total gain of 41.77% all time. These are definitely numbers that I absolutely couldn't have expected when I first started investing, especially with how everything was falling and in the red in 2022, where the S&P 500 fell as much as 18%. Now scrolling down, these are the holdings currently in the portfolio. Feel free to pause and take a closer look at these, but I prefer to view all this information in my spreadsheet instead, so that's where we'll head over to now. Starting with the transactions tab, I've already filtered for the non-registered account, and these are all the transactions that have happened in the month of November. If we highlight the deposit amount column, we can see that there was a total of $800 deposited into the account, with 63 cents from stock lending. In terms of dividends, there was a total of $713.72 that was received this month. Then for the purchases I made, there are quite a few this month. I'll go over the first part of these first, before I go over some of the stock sales. The first few were into Enduro Clean Technologies, as they were about to be listed on the New York Stock Exchange. So with the greater exposure and availability to the US markets, I wanted to add more to my position for the potential upside of this news. The next few were into BCE, trying to lower my average to speed up the recovery so I can exit position closer to break even. Then I added to my ENCL position, and also started small positions in both YMET and LLHE as they pulled back a bit. For this next part is where I made some sales, and if I were to change the filtering, you can see that I exit my positions in both BCE and BTCY.B. On the BCE sale, I actualized a loss of $1,250.70, but with the dividends included, it was a loss of $885.58. For the BTCY.B sale, I actualized a profit of $198.04, but with the dividends included, it was a total return of $210.09. To see what I did with the proceeds, I'll unfilter the table. With BCE, I was looking for it to have found a bottom and to start to show signs of life when I added more to it. But with another bad earnings report and the news of where I'll pause the dividend increases for this coming year, I didn't have any more patience to wait for recovery. So I decided to put the remaining money into better opportunities to recoup the loss. The first of which was BTCY.B, which is the unhedged cover call Bitcoin ETF to generate income, and then I added more into Enduro and also to the Eli Lilly position. I admit that these purchases come with some even greater risk, but also have higher potential of gains should they work out. Bitcoin was starting to see some momentum, and with the news of a new potential bull run towards 100k, I decided to add more to my existing position. For Enduro, I added to this at the highs after it was listed on the New York Stock Exchange, so it's currently at a loss because it's pulled back a bit, but it's a small cap play which still has potential to go higher, so I'm not worried. Then for Eli Lilly, I added a bit more to average down as it continued to pull back on some political news. So after all those moves, the next one is on Nvidia, where it was pulling back a bit before earnings. So I saw an opportunity to add a very small position in it. They ended up beating expectations and went up slightly, but it's since come back down a little bit, so we'll see if I average down here or wait a little bit more. And finally, the last transaction here is the sale of BTCY.B mentioned earlier, and I swapped it directly into BTCX.B. I had actually touched upon this in a reply to a comment from the last video, and in comparing the performance of Bitcoin to BTCY.B, it just didn't make too much sense with how volatile it is as an asset, but also the huge potential upside that Bitcoin could have in the future. In the end, I decided that the relatively small yield didn't justify the upside in Bitcoin if it were to realize its massive upside potential. So I decided to go with just a regular Bitcoin ETF without the yield in order to maximize the future gains. Now on the dashboard, we can see that the portfolio value is currently at $101,730.57. For the total deposits, it's at $72,144.38. and the lifetime dividends received in the account since inception is at $12,304.32. Now moving on to the summary section at the top, the day P&L is just the price fluctuations from a day-to-day basis, so it's not something I pay too much attention to. But a portfolio of this size can typically range from $400 to $800 swings, depending on the underlying stocks you hold, and then on the stronger days, it can be upwards of $1,000 to $1,500 swings. The total P&L is the same as a capital return for the portfolio, which is an unrealized gain, and it is sitting at $15,037.60. Then the total return, which is the combination of all the realized and unrealized gains in the portfolio, is currently at $29,588.11. So this would be how much I would have made from this portfolio if I were to sell everything at this moment. As for the dividend yield, it has remained above my personal goal of 10% because of the rate it would enable the portfolio to compound at. Then lastly, the annual dividends I can expect to earn each year is at $10,033.24. Moving on to the charts now, if we look at the portfolio value, we can see that it is still at all-time highs currently. And if you've been keeping up with these updates, you'll notice that the chart might look a little different, and that's because I added another line for deposits to this chart as well. This ties directly to the performance indicator here, where it shows if your portfolio is a high, moderate, or poor performing one. It's a custom indicator I put together where if your portfolio value is above your total invested amount, it's considered a high performance portfolio. If the portfolio value were to drop below the total invested amount, then it would drop to moderate performance because it would mean you have lost some value on the money you've currently invested in the market. Then finally, a poor performing one is when the portfolio value falls below your deposits, which would mean that you're currently losing money on your investments and should probably look at what's happening within the portfolio. Now looking at the charts for comparison since the portfolio's inception, we've actually been closing the gap with the S&P 500 and now currently sit around 9 to 10% away. Keep in mind this comparison isn't something I put a lot of emphasis on, and you can pause here to read the additional information or watch the previous portfolio review videos to understand why. I've repeated it enough times now, so hopefully this will be more efficient going forward. Now moving on to the projected monthly dividends, we're ending the year with an $808.43 dividend month. It's come a long way since last December's $573.83, and then the $226.79 from the December before that. Lastly is a projected portfolio value in 10 years, and looking at the 2024 values, we are well ahead of the projections right now. So let's hope we can continue the trend for next year in 2025. With the sale of BCE, it trimmed the communication services sector considerably to something I'm more satisfied with, but I think I'd like to eventually exit altogether. Then for the returns by sector, we can see that the sector with the best return so far relative to the invested amount is the technology sector with almost half of my investment returned. Utilities has also done very well, but that consists of just a single stock and CPX. Then towards the bottom we can see all the numbers, and a majority of the sectors have provided positive returns so far, aside from the healthcare, real estate, and communication services sectors. Starting with sorting the invested column, the top 5 holdings are USCL, YTSL, HYLD, TELUS, and Bank. Aside from TELUS, which I've already mentioned in wanting to eventually exit, all the others are what I consider core holdings in the portfolio. Yes, the Tesla position is a bit risky, but I'm holding it primarily for the distribution income it provides each and every month. Then the smallest 5 holdings are YMET, NVHE, LLHE, BTCX.B, and ACT. Almost all of these are brand new positions, so these may eventually move up a bit as I add to some of them over time. If we now sort the total P&L column, we can see which ones are at the top for unrealized capital return. The top 5 holdings are YTSL, HTAE, YAMZ, CPX, and HYLD. The turnaround for Tesla stock has been wild since the election and is approaching the all-time highs near $400. This has caused YTSL to shoot back up into the green and is now showing a big capital return of $2,219.53. Then for the bottom 5 holdings, they are TELUS, TD, RMAX, LLHE, and NVHE. Aside from TELUS and TD, the others are all relatively new positions as mentioned earlier. Now filtering by annual dividends, the top 5 dividend payers are still YTSL, HYLD, USCL, Bank, and HTAE. These likely won't change very much as I'm happy with the current allocations of each of these. Eventually though, the index position should grow and provide more of the dividend income. Then the bottom 5 payers are YMET, ATD, NVHE, GSY, and then RMAX. This is a mix of smaller positions that I just started, but also some dividend growth holdings in ATD and GSY. Sorting now by the dividend yield, we see the top 5 are LLHE, NVHE, ENCL, Bank, and MSHE. 3 of these are from Harvest ETF's new high income shares, which are just launched recently, and then 2 favorites for passive income investors in ENCL and Bank. As for the bottom 5, we have ATD, GSY, CPX, TD, and ENB. All of these are more of your traditional dividend growth type of investments, which have lower yields, but are expected to have the dividends grow through dividend raises each and every year. I purchased all of these very early on when I started to invest and was still learning, but I think over time I may exit out these positions and switch them to higher yielding ones. But for now I believe they still have room to grow on the upside, so I'll probably hold onto these until the Bank of Canada ends the cycle of lowering interest rates. The next column is the lifetime dividends column, which is all the dividends I've received since holding each individual stock or ETF. For top 5, we have YTSL, HYLD, USCL, HTAE, and then TELUS. I'm actually a bit surprised to see TELUS on this list cracking the top 5, but I suppose it's one of the stocks I've held the longest in the portfolio so far with a relatively high yield. As for the bottom 5, these are all actually the same amount with $0 received, and they are YMET, NVHE, LLHE, BTCX.B, and ACT. 2 of these don't actually pay a dividend, and the other 3 are new holdings that have yet to pay out a distribution. So by next month, they should show a value above $0. And finally, for the most important column, which is the total returns for each holding. This is the most important measure of performance because it includes both the unrealized capital gains along with the lifetime dividends that have been received. So for the top 5, we have YAMZ, GSY, CPX, YTSL, and then HTAE. We're inching closer, but I'm still waiting for the first 100% return. ACT was actually the closest at about 80% before I more than doubled my position with the proceeds from the BCE sale. So that dropped the total return down to where it is now at about 25%. So as of now, I'm going to say that Amazon will probably be the first one to get there, unless ACT sees some more positive news in the next year. But the rest of these are no slouches and are all basically at 50% or above in total returns. On the opposite end, the bottom 5 are TELUS, LLHE, YMET, NVHE, and RMAX. I think going forward, after experiencing the bigger losses of selling AQN and BCE at negative 26% and negative 22% loss in total returns, I'm going to set a personal threshold of negative 20%. If a holding reaches that point, it's better to just cut bait and move the remaining investment elsewhere because it just isn't worth the stress and time waiting for a potential recovery. So far, these are not yet close to that point and are all relatively small positions aside from TELUS. The first 3 charts here are the same as the ones on the dashboard tab, or we've already talked about it, so we'll move down to the others. Starting with the stock price return performance chart, things are looking good aside from TELUS, which is the biggest loser in terms of price performance. Some of the standout performers are Amazon, GoEasy, and Capital Power Corporation. Then looking at the dividend yield chart, a lot of these are in the red, which means they are currently trading below their 4-year average dividend yield. That means many of these stocks are currently trading at a premium, and the ones that are in the green are ones which could be potential buying opportunities. Another thing with this chart that I haven't mentioned yet is that with some of these in the red, it can also indicate potential dividend increases in the future because some of these ETFs tend to have a target yield. An example would be for YTSL, where in the past we've seen the dividend get raised as Tesla jumped up in price, and that's in order to distribute the target of about 20% dividend yield. And vice versa happens, where if Tesla's stock price falls and stays consistently at that lower price, the dividend will also be reduced to maintain a 20% dividend yield. So as you can see from the stock chart currently, YTSL at the current stock price has a 13.986% dividend yield. So if it remains at this range going forward, the dividend will likely get an increase again to reach that approximate 20% target. With that in mind, we can expect it to rise to potentially 40 cents to get to that approximate 20% dividend yield. Moving on, we have the current price and 52-week range chart. In terms of purchasing opportunities, it looks like YGOG, GSY, TELUS, and TD are the only ones that are furthest from the 52-week highs and have some room for potential growth. For 52-week highs, it's basically everything else in the portfolio. With how the markets have been lately and the continuous all-time highs the indexes have been making, it's no surprise. Then for this next chart is a visualization of the capital returns versus the dividend return of each holding. With Tesla's surge this past month, it's far ahead in the lead for both capital return and dividend return, with the total between the both crossing over the $4,000 mark. The next highest is HYLD, and then followed by HTAE, USCL, and then YAMZ. Again, the biggest loser in the portfolio is TELUS, but the dividend return will eventually help break even on the position. There's just one more month left in this year, and here's to hoping that the bull run continues until the end of the year with a Christmas rally. If you enjoyed this type of content, feel free to like and subscribe to help out the channel. And with that, I'll see you in the next video.